Now, capital asset disclosure. What you'll find is that there's quite a bit of disclosure on capital assets. And actually, we can take a look at a sample. Okay. What I want you to do is, this is from the Comprehensive Annual Financial Report, the capital asset disclosure. Notice how it's set up. Beginning balance, addition, retirements or disposition, and the ending balance. See how it's laid out? Okay. Next, look at how it's divided. Governmental activities and business type activities. Everybody got that? Okay. Governmental activities and business type activities. Capital disclosure. Next, capital assets that are not being depreciated are separated from capital assets which are being depreciated, right? Got that one? Next, accumulated depreciation is shown separately, right? A little different disclosure than what we are used to. All right? And again, it's the same story on this side. But the important thing is that this part is separated from this part, and you separate items which are being depreciated from items which are not being depreciated here. So what are the items not being depreciated? Land, easement, art, construction work in progress, software development. Notice capital asset being depreciated. Are these guys using modified approach? Is this entity using modified approach for its capital assets if I showed you this? No, because they are doing what? They are depreciating. Everybody with me? Okay. Everybody got that? Okay. All right, so you looked at this. Let's go to the next one. So there is depreciation expense. Notice how it's being allocated to these functions, the business type activities and governmental activities. This is in the government-wide statement, which is the government-wide statement of activities. So depreciation is usually allocated to the assets, to the functions themselves. All right, since you guys are so good at this, let's try to do another question. I want you to take a look at this and tell me what's wrong. Page 205. Just take a few minutes. Okay, so who wants to volunteer for this? Yes. What's wrong with this picture? Very good. Yeah. Doesn't separate that. What else? Does not differentiate between acquisition and disposals. It shows it as one column. Very good. What else? about throwing everything into one category? Remember in the other one disclosure, we had land, we had all these, we had separate line disclosures for the different asset classes, right? For land, building, equipment, right? Okay. Anything else? Yeah. Yeah, that's what we were talking about. They have to, the only other thing is that it doesn't show the last part of the schedule, which is the depreciation expense by function, because that's part which we just saw. So those are the items. When you look at it, those are the things that are wrong. Now, tell me one thing. Does the county use the modified approach to account for infrastructure assets? Do they use the modified approach or they don't? Yes, they do. Because it said capital assets not being depreciated, infrastructure is shown as part of that. Is everybody with me? Okay. I see it. Maybe it's early in the morning, but I need some more energy from you guys. Okay? Yes, it is. And then, by the way, the last question, which we won't get into, is what percentage of the useful life of the depreciable assets remain? And this is just a matter of, calculating this number, which is, it's 15 million on the right. Depreciable assets are what? 15,068,000. And total depreciation is what? 4,002,000. So whatever is left, 15 million, let's say, is left. I'm sorry, 10 million is left. 10 million divided by 15 is 70 some odd percent. That's how you do that. Is it a tough calculation? What's the total total assets which are being depreciated? 15 million. What's the depreciation? 4 million. What's left? 11 million. 11 divided by 15 is whatever, 75%, whatever that number is. Okay, so that's an example of how we do this. 73%? That sounds good. Excellent. Okay. All right. Any questions on that, by the way? Everybody still? Okay. Here? Okay. And this just really talks about what happens once you acquire those assets and you have additions and betterments. And I think most of you know, if it extends the life of the asset, what do? You capitalize it. If it's a main